And for the NSE index, we saw that up just about 0.1% in yesterday's trading. And for the Naira, though, we saw the Naira slightly weak at about 158 Naira to the US dollar. We'll talk more about the Naira as we cross now to Stanbic IBTC, where Dare Otitoju, an FX trader with Global Markets, is standing by for a discussion. Dare, thank you for joining us. Maybe we should start with the Naira. The Naira weaker yesterday at 158. Your thoughts on where the Naira is headed?
Big one. The kind of supply that we have seen in the market in the last few months is gradually reducing, and the impact is definitely felt in the interbank market, especially. Right. What we have witnessed over the months, especially since last year after the JP Morgan index, is that we have seen continuous flow, and this continuous flow has supported the Naira at 156, 157 level. But as the investors start reducing the amount of flows that comes into the market, then the impact is now getting to the exchange. Okay. We saw yesterday that the market actually gets to 158.1525.
Okay, so the Naira under a little bit of pressure, largely because foreign investors are less interested, if you like, in Nigerian bonds. And we've seen that reflect also in the bond yields. Bond yields risen over the last week to an average of about 11.1%. And it's largely because the local players are becoming less interested. They are taking profit because the foreigners are not as active as they used to be. Your thoughts on that dynamic?
Yeah, for the local banks, most of them are actually long bonds. So they were carrying 10 years, 7 years, and 5 years bonds in their books with the hope that the foreign investors are probably going to be coming to buy. But as you see the slowdown, then it is getting to the stage where you have to review that strategy. And that is why you have seen the movement from 10.4 on the average to 11.1%. Notwithstanding the fact that there is so much liquidity in the system, the bond yield is gradually getting corrected.
That liquidity is going to be a big topic at next week's MPC, and I want to get your thoughts on the possibility that we may even see tightening, because I think a lot of people are expecting, because inflation has come down, that we would see some loosening of monetary policy. But with the liquidity where it is, given all the maturities we've seen in the bond market and of course even in the T-bill, OMO T-bill market, there is a possibility that we may see tightening as opposed to an expansion of monetary policy. Do you share that thought as well?
It's an option that can come up, especially at the MPC. Remember that MPC is not only tackling inflation; they also have exchange also to tackle. Comparing the exchange, especially in the interbank market, between the last MPC and the current MPC, then probably they will have seen about 2 Naira depreciation. So that is enough for them to probably say, okay, what can we do in terms of the option of tightening? But looking at the MPC and the kind of view that they have taken in the last MPC meetings, they might probably just maintain them. But if there's going to be any tightening at all, then that should be happening at the cash reserve ratio.